So, I mean, we have the regular operating expenses, revenues and all. So, we can very well compute the basic profit and loss statement. Of course, we may not have information relating to the depreciation right away. We don't have the information relating to the taxes, but at least with whatever the basic skeleton we have, we will create a P&L statement. But once we compute the depreciation as well as the tax, we'll incorporate those aspects also, because for depreciation we may have to make a separate sheet, and for tax also we'll have to make a separate sheet, right? So without those two, we'll try to make only the P&L statement, because that will create from the basic revenues and the basic expenses whatever we have. Using those two, we can create the entire up to the PAT. But of course, we'll not have the information relating to the. We'll just leave the placeholders for depreciation and tax. Interest we do have, right? Because we have borrowed. But of course, if we take any overdrafts or anything because of cash shortage or anything, that will come once we make a cash flow statement. So there it will go as an iteration again. So the basic skeleton P&L statement is what we can make at this moment, just by taking the revenues and the expenses for each of the periods up to 2014, right? So again there I'll create one more sheet, calling it as P&L. The first two lines remain one and the same, where I'll get the data exactly from this, the year number and the year. Those two things will remain the same for me. So these two again are the same for all the aspects, year number and the year. As headings, I will go with one. Okay, I'll put it as revenue from operations. The regular skeleton or the template which will contain as a part of the P&L, I'll have revenue from operations, then I'll have other income or other revenue, especially if I get something from reinvestments or cash investments or something. If I get some kind of revenue because of surplus cash reinvesting and all, I'll put it as a part of the other revenue. Even I don't have this number as this at this moment. So these two put together, I am calling it as total revenue. Similarly, another expense, I'll put it as total O&M expenses, operating and maintenance expenses, which we have already prepared a sheet for. And yesterday we have done on lease rentals. So that is also one more expense. And annual development premium. This is also something which we have done. For first 3 years, there is still existing that 30 crores. Only 15 crores has been paid in the first 1-2 years. Only that much we have accommodated in the first 2 years. So the remaining 3 years P&L, I need to have that 500 or 5 crores for each of the first 3 years, and after that I will not have that. Okay, so that is accounting for total expenses. Between these two, if I subtract total revenues and total expense, I'll get my PBDIT, from where I'll take out depreciation. I have to calculate the depreciation. So from that I'll get my PBIT, from where I'll subtract my interest. So I'll call it as interest on loan as well as interest on overdraft. If at all there is any requirement for overdraft, I'll have to check it out based on my cash flows. So I'll go for an interest on loan and interest on overdraft facility. Based on subtraction of those two, I'll get my PBT. Then I'll have to subtract my tax, which will give me my PAT. This is my overall structure for the P&L statement, right? So with this overall structure, I'll go with filling whatever the amounts which I have. Revenue from operations is the number which we already have. The entire revenue sheet, I'll just link the final value of that. So equal to whatever is the final value from the revenue sheet, that is the revenue from my operations. So I'll select this entire space. Yeah. Because in your case the value may not change. In case any other assumption changes, the value may, but for the existing numbers you will get the same. So that is your revenue from operations. That part exists. Other revenue even we have not computed till now, because unless I get some cash, unless I look at reinvesting that cash somewhere else, getting some returns out of that cash, depends on how much surplus cash I am generating. So that part I will come and update here. So sorry, yeah, no, not the debt reserve account. Debt reserve account is something that is mandatory, but sometimes if I have more than that also, I may think of reinvesting. That is what I am calling as cash. But yeah, both of them will give me extra revenue, right? Because I'm reinvesting. It's more like revenue from my investments, not revenue from my core business or operations. Revenue from any other investments. Probably if they are giving some dividends or something like that, all I put it as a part of revenue. But the regular thing which we generally put is any surplus cash, I reinvest and get some revenue out of it. Right? Once we make the cash flow statement only, that will become clear for us. So at this moment, I am just leaving that as blank. Whereas the total revenue will come out as the summation of the above two. The revenue from operations as well as the other revenue. So I'll simply add it. I'll simply say a sum of these two. I'll say the sum of these two. So right now it is 0. Depending on if I am going to generate any other revenue, what happened here? Yeah, depending on whether I am generating any other revenue, I'll have a value. What is going wrong here? Okay. Depending on if I generate any other revenue, it will add up to my revenue. Otherwise, up to this period, this is going to be my revenue. Similarly, O&M expenses I'll have, which I'll pull from my that expenses sheet. The final value of the expenses sheet is what I am putting as O&M expenses. So this value also have, and I can drag it till the last. So this is what is going to be my expenses for that period. Then I have the lease rentals. Yeah, lease rentals we have calculated in the first basic calculations kind of sheet. So I can put that lease rentals from the base calculations. This is my total lease expense, which we have calculated yesterday as a part of the lease rentals. Right? So this will become 123 for the first year. And probably I can add that up. Yeah. I mean, whatever is that number. So you want me to go with that 80? The last year, yeah, otherwise it will show a negative. Correct. But that would be in the last year. So probably you create one more year here, which will show as you can add it up. Probably it is like as a part of your other revenue, other income, for the last year you add this part. So only for the last year we'll just add this part once we create the other revenue, because let's not add it to the existing revenue from the operations. Let it be as a part of the other revenue, and you can put as a comment in your other revenue even that lease deposit that is refunded. Yeah, for the last year you can add it up. Huh. You can add a separate row saying lease refundal deposit refund. Yeah, otherwise that may create, so probably, yeah, before other total revenue, we just call it as we just call this as refund of lease deposit. So probably directly in the last year, or directly if you really want to write that also as a formula, we'll say if this number, if the year is actually equal to the total years, the concession years, if both are same, then do whatever is the lease deposit of the last year. So the lease deposit of the last year, which will end up as, you can directly come to the last year's value, take the last year refund value, otherwise mark it as 0. And this you take the negative of this, because now you are treating it not as an expense but directly as a revenue itself. Or probably you directly take the last year's lease deposit. The last year's lease deposit you directly take, that is coming out as your revenue. And this B2 you can put it as a dollar. So once I drag it, for the first year I may not have anything. When I drag it till the last, I'm not getting anything else also. Okay, AH. Okay, this okay, this no, this also has to be a dollar. Or okay, then you can very well take the lease deposit itself. The lease deposit you can directly take from the first year itself. If it is equal to the last year, you just refund that lease deposit. Otherwise, don't talk anything about. So otherwise, write it as 0. So that is where you will get your last amount as. Yeah, you are saying. See, this all will come as a comfort only based on your Excel. Right? The more and more you have a hold on the Excel formulas, you will get into the grip for this. So I'm simply saying if this last year, I mean this year number is equal to your total concession period, 33 years. Which means in whatever year that is matching, for that I am putting a dollar here. I am saying when they are matching, refund the lease deposit. So your revenue will be equal. Yeah. No, in basic calculation, I am taking directly the lease deposit for that year itself. Whenever those two are equal, I'll take the lease deposit of that year. Else I'll take it as 0. Now I'll drag this formula. Only in the last year it gives me that number, and here in the addition also I'll take the addition in the total revenue. I'll take the addition from B3 to B5. So my total revenue is also updated, which includes even my total release refund deposit also. So the last one, then I don't need to consider this last one anymore because we have treated it as a revenue. Okay, then we have annual development premium. The annual development premium for each of the years we have it. We'll get it from the assumption sheet. Somewhere we have written that annual development premium 5 years. Where did we write that? Yeah, upfront premium breakup. Year 1 to year 5 is what we have mentioned here. So this is what I'll take it as annual development premium for the first year. And of course for the next few years, I'll simply drag it off. So it will exist only for up to the first 5 years. So that also will add up to my annual development. That also will add up to my expense. So my total expenses, anyhow, which we will not use anything for the first 2 years, because the actual these are all taken as a part of my interest construction cost itself. All the expenses and all are taken. Lease rentals for the first 2 years we have already taken care of there itself in the construction cost. So it's better if this is made directly from 2014 itself. Even if it is there for 2012 and 13, I'll not give any weightage to those numbers because they are all considered as a part of my construction costs. Even the annual development expenses, that first 1500, we have considered them as a part of the so it's basically like we are breaking the phase into construction phase and post construction phase. So this is immaterial. This number has no relevance. 1123 at least. At least first 2 years there is no relevance. Only from the third year it has its value. So this comes out to be my total expense for the first 2 years. Just I'll pause it here. Just look at it. 1 or 2 if you are done. And after that it follows. No issues. Yeah, then we are talking about PBDIT, where I am talking of revenues minus expenses. So the total revenues minus total expenses. First 1-2 years leave it. Hardly it matters to us because we really haven't considered everything as a part of, because as a part of our typical expense matching the revenues funda, because we don't have revenues in the first 2 years, I don't need to consider anything into expenses. So let that be dummy. Let's not consider whatever the calculation it calculates. It's a pure dummy calculation there. So look at it from 2014 onwards. The numbers should be good enough. So that is your PBDIT. Then depreciation, we don't have the value as of now. Right? Once we bring in the depreciation value, we'll put it. But let's complete the sheet. So PBIT comes out as PBDIT minus depreciation. Just with that blank, we can pull it. Once we get the values, we'll update it. That will be automatically updated. So right now your PBDIT and PBIT should be the same. Now, coming on to the interest on the loan. We have actually done some kind of interest calculation here. Right? This is the interest calculation we have done. Now, these are what the interest, but these are applicable right from 2015 onwards. So, but here we have written them as 1, 2, 3 up to 12. So, probably we should have some kind of a mechanism where we can convert these interests for those specific years. Right? Because this interest sheet, whatever we have done, is first 2 years we are taken as a part of the IDC. IDC and in the part of construction costs itself. The third year was a moratorium. So only from the fourth year onwards, this interest costs are applicable to us. So either I take that as manual or I take the year again as a differential and all. Right? Probably what I can do is, because this is a 12-year period to start with, we'll put it as manual, 12-year period. Right? One way is I simply do a transpose function, so that instead of copying and pasting and creating that kind of dynamicness, what I can do is, on the interest on loan, I'll simply do a transpose. I'll simply do a transpose function from the fourth year onwards. I'll do a transpose function on this financing sheet, only this interest aspect, these 12. Right? This 12, I am doing a simple transpose function equal to transpose of all those. Now it will not directly give a right value. Transpose as a formula, again probably it's better remembering this model. Transpose is a part of array function of Excel. The way it actually works is, I cannot drag the formula. It will not work when I drag the formula. Once I write it, I have to select exactly the 12 locations. So because I am doing from 2015, I'll select up to 2026. All these 12 locations I have to select. Press F2, where the formula will be displayed. And after that, press Control, Shift and Enter together. Right? Whereas, okay, here because these are my numbers. Is equal to transpose of, these are my interest rates, and I do Control, Shift, Enter. Yeah, this time I got. See, all I have to do is, I do a simple transpose. These are array related functions. You will not get them through simple dragging. Whatever the area you want them to be pasted, let's say from 2015 to 2026. Those are the 12 years for which I have to do the pasting of that interest rate, because that's only for a 12-year loan. After selecting it, I'll write transpose. I'll select the transpose of these values. These are the values for which I want to do the transpose. I'll not do an enter. I'll have to do control shift and enter, which will paste that entire area, because dragging will not give you the solution for this formula. This is a separate category of formula. So the dragging will not give me a solution here. Only I have to do this control shift and enter kind of a situation. So that is what is the interest which I am paying on the loan. I don't know the interest on the overdraft at this moment. And here the negative is already taken care of, that I am paying. So I don't need to subtract here, I have to add that back. Because a negative number, it's subtracting a positive number is same as adding a negative number. This you are not getting. Because we don't have interest on draft or anything at this moment, I can directly find out the PBT. The PBIT plus interest on loan, because it's already showing a negative. And instead of subtracting, I'll say plus interest on loan minus interest on draft. Assuming that draft, I'll get it as a positive number, I'll take it as a minus interest. So it's basically the subtracting of all. Because here the subtracting is already taken care of, I'm taking an addition. PBIT plus interest on loan, because otherwise I have to take it as a subtraction, but it is already showing a negative number. Right? Because it has already done the subtraction. So that's where I am simply putting a plus. Otherwise, here I have to make sure that this comes out as a positive number, either of the ways. So assuming that the interest on the draft loan, I will get it as a positive number. I am just putting a minus. Not required. Plus and minus, they can be interchangeable. I mean, going with a typical Excel adding and subtracting mechanism, additions and subtractions, they don't require specific brackets. So I'll take this number. So across the period, I'll get these values. So somewhere in the middle where the interest was applicable, we have the calculations happening, and wherever the interest was not applicable, you are seeing PBIT same as PBT. Now we don't have the tax also right now in place. So the same thing, PBT minus tax will give me the PAT. PBT minus tax will give me the PAT. And with this, my income statement is fully in place. Of course, there are 4 different areas which need to be filled in this income statement. Tax is yet to be filled. If there is any overdraft and loan, interest on overdraft kind of thing needs to be filled. And if there is other revenue, and that needs to be filled, and depreciation need to be filled. So 4 more areas left. But once we fill those 4 areas, my updated income statement also will be ready.